Hello, wonderful traders. Dadas here, speaking to you from the Dadas Trading Room on Discord, where I stream every day. I stream all my trades, so you are sincerely invited. Of course, I stream during the London session and during the American session. Basically, usually somewhere from 10, 11 o'clock in the morning, Central European time, and until 10 p.m. So that's 2200 hours, also Central European time. Then I am available. I'm still around usually until late at night. I mean, until at least 1 o'clock at night, Central European time, of course. But I'm not. I cannot voice chat, and in those hours. This is. I mean, this is the last video where I can voice, right? Do some voice. Okay. And I'm making this video at 11 p.m. That is 2300 hours. In English, basically because the market is then waiting, and there is a break, one hour break for in the market. Okay, so what happened today on the DAX 30 index? Basically, during the whole Asian session, it was basically trending down, right? It was trending down, and then on the opening of the Frankfurt session and London session, it continued to trend down with a pretty big, relatively higher volatility candle on the opening of the London session. Now, true, today there was some kind of a bank holiday in Germany. However, this pretty much looked to me like it was going to be a short, right? So basically a short day, because the day was basically on the short side. So I was trying to figure out what basically I could trade here, and I thought of come on, I measured it like this, and I was thinking of actually trading short. I think I measured it out something like this, or perhaps even further, because I was going further. So I measured it something like this, and yeah, we can go to our trading charts right here, and you'll see that I had a very tough day today. No, actually, I didn't measure it out exactly like this. I have to go back to the M5 and check out what I actually did. I did something like this, I think. Yeah, something like this. Yeah. Okay, and so. Basically, I figured out, that the market, it looked pretty nice right here, the price action and everything. So I figured out that, this candle was pretty strong. So it looked like, at least on this candle, it looked like the market would be going down, right? At least going down, at least this much between the lines. Well, the market actually didn't go down. It started moving up suddenly, right? So I decided to, that was exactly what I did here. Was the plan. The plan was to wait until the resistance, see what happens on the resistance, and then get in on a martingale, right? So it's a double the position in the same direction. Because then at about halfway through, or even better, we are back in profit, right? Because you can see that this is like 34 pips on 0.5 lots, and this is 25 pips on 0.5 lots, so that makes it about 10 pip profit. Yeah, so that's why I got out here, because I wasn't sure at this moment whether the market would be going up or down. Well, it actually did continue to go down, and it even reached this level right here, right? And it even reached this level right here. Well, again, I was watching the market, and again, the market went up and started going down again. So I did my regular job, right? So I went back to the M5 and I started measuring it out again. So this time, let's say a bit one level lower, right? One level lower. Okay, so yeah, one level lower. So basically, everything here was saying that we're going to continue down. I mean, look, the market was making lower highs and lower lows, right? Even this low right here was lower than the one before. I mean, if you don't believe me, I can just see that low was lower than that one. So in this moment, I couldn't know that all of a sudden the market would decide to turn around. And in this situation, I was thinking of repeating the same thing, right, as before. So I thought to myself, okay, I'm gonna wait and then I'm gonna double in the same direction. But I was hoping the market would come back, and by the price action, the way the market was started developing right here, I saw clearly that at this moment we have a new higher high, right? So we have higher lows and we have a higher high. So that's no longer a bearish trend. That's already a bullish trend. So I turned around at with a martingale again, but in the other direction. You see that the market first went down a bit, and then and of course on the way I started measuring. Now at this moment, I thought, oh well, you got to do the measurement in the other direction, right? It doesn't look like a short anymore. It looks like a long. So I started trying to measure this out. Maybe a bit like this, right? Or something like this. But the problem here today was that whatever I did, I was trying to measure out, it didn't fit exactly what the market was doing. And I had a difficulty fitting my zones into the consolidations, right? Because basically this was one big consolidation today, basically. Of course, it was like 131 pips consolidation, but still, it was a consolidation. At least during the what happened during the London and the New York sessions, right? So, but anyways, I turned around. I was hoping for the market to go higher. It didn't, right? It didn't. Of course, I closed it out right here when I simply made up for the loss right here, right? So basically, I made up. I recovered this loss. So this is like a break-even trade, right? These two trades are like a break-even trade. But then I was looking at this market again, and again I saw. This pretty much looked like the market would be continuing to go up. So I entered the long, right? I entered long, but I was even at a profit for a little while. But today I thought to myself, well, everybody always says that I have a difficulty waiting out the trade, right? I said, okay, then I'll try to wait out the trade. Basically that's what I was trying to do, wait out the trade today. So I waited out the trade, and the market suddenly moved back down. I had some hopes right here. I thought, well, maybe they're going down. They're just going down for some kind of a retest, and then they're gonna go back up. Well, no, they decided not to go back up, and at this moment it started to look bearish again. So I jumped out of this trade. It was a 0.9 lots, and I jumped in at 3 lots, a little bit higher right here, like as a resistance, and I again recovered the loss, but I just barely recovered the loss. I mean, again, this was more like a break-even trade than anything else. So basically, the only profit that I made really today was on the first 2 trades, and altogether it summed up to $3.4. So $3.40. Well, still, it's in profit, not in loss. And you know, this market really made me tired today. And I after this last action, I thought to myself that I'm ending today because I'm sorry, but this is costing me too much emotionally, right? This type of trading. So yeah, so I stopped. And I did the right thing. I mean, you see that the market basically consolidated. Now, looking from the perspective, well, basically, what was the right thing to do? I mean, basically, the right thing was to look for something that I usually say. Look for the context that fits the consolidations best, right? I mean, so the pullbacks. So if I'm now to look at the context that fits the pullbacks best, then the context that fits the pullbacks best is here. Why? At least on this bullish movement, because here, this zone between the blue line and the yellow line, this zone fits inside the zone, right? This pullback fits inside the zone. If I took it a level lower, right? If I took it a level lower, then it doesn't fit. It goes out, right? It doesn't fit. So that's not the right context. The right context would be that it fits inside. Now, when it fits inside, everything starts looking pretty amazingly proper, because it fits inside. It fits inside. Yeah, it fits inside. Well, right there, it didn't exactly reach the top. Nevertheless, it did. I mean, this. If I had looked at it from this perspective, perhaps this would have been a situation where maybe I wouldn't get in this long so high, right? Because I would need to get in this long somewhere right here. And even so, if I already had this situation right there, the top one, the top pullback, then I would have to readjust. So in order to readjust, I would have to do something like this, right? Or even not, because this is still, it's not fitting, right? I mean, the whole consolidation doesn't fit inside. So I'd have to pull it even further, like this. Now the consolidation fits inside, right? Yeah, now in this context, the consolidation fits inside. Now, would that have been a situation for a long trade? Right there, I don't know. Well, perhaps it would be, right? I mean, perhaps it would be. Why not? I mean, it still doesn't fit perfectly. I mean, it's kind of wide for this consolidation, but basically this sort of represents the market best, because that's kind of the way that the market was behaving. And basically, if we measured it out right there, well, of course we couldn't have known this level earlier. We could have only have known that level earlier on the left, right? So basically, that's where the market. That's what the market was moving in. That was the range the market was moving in, exactly. Just made a little breakdown right here. So basically, Well, the market actually did make 200 pips today from high to low, but they made it on this little breakout. So looking at what's happening, and the fact that tomorrow is when it's Friday, and the market today was kind of undecisive, and then we have to look at all the other time frames. So you can just look at these mini charts that I have down there in the sub window. It's called Data's Control Panel. Well, we can see that basically the whole M15 was bouncing off some kind of resistance, right? Now H4s are basically red. The daily has closed red, and well, there is some room until support. The weekly, well, the weekly is kind of on the bullish side, but looking also at the daily is also at resistance, right? Plus, we see that basically, the monthly, the 2 months right now are still a pullback on the two bearish candles. So I wouldn't really be surprised. I'm not saying that. I'm just saying that there are two options tomorrow, probably. There's either the market is going to go sideways tomorrow again, and it's going to be such a shitty situation where we don't actually know what's going on, or there might be some pretty significant movements, and who knows if those movements aren't going to be bearish. But we don't really know, because how the weekly candle is gonna end. Whether it's gonna end with a wick, or perhaps it's gonna end with 2 wicks. Maybe it's gonna go down and back up. It's also possible. Anyways, the H4s are strongly suggesting some more pullback, right? Towards this here, somewhere in the area of this wick. Let's say this wick that happened yesterday, maybe, I don't know. Yeah. So that's the wick right there. Yeah. So basically, but that's like more like a prediction of what may be possible. Of course, we don't really actually know what will happen. We'll see tomorrow, right? We always know after the fact what actually happens. Anyways, that was my day today. Pretty much, a pretty stressful day. But all in all, ended a very small profit, only $3.40, but still it's a profit, not a loss. And I'm kind of satisfied with that fact. Okay. But basically, I still need to work on this measuring method, which is, it's a great method. Actually, it is. It's the best method that I've ever developed. Right? It's even better than the DSWS. Right? And of course, this is in cooperation with Data's Trade Ruler, because you see, well, basically, if we measure this out with the Data's Trade Ruler, then basically this is what happened. This is actually the trade here, but the context is bearish, not bullish, right? And this was a pretty difficult thing to figure out today, considering what the market was doing. But perhaps if we take another look from a different perspective, well, basically, I could have used the first measurement that I did, right? And basically looking at the M15 chart, I have to pay attention. Because it also all depends on the volatility of the market. Because sometimes it's enough to look at M5, but sometimes you just have to look at M15. Because from this point of view, right? From this point of view, we can see that basically the market was bearish all the time. And again, if we make this consolidation to the full, right, then those breakouts weren't really breakouts. I mean, yeah, on the M5 we have these wicks here. So these wicks, we can consider these wicks as well. Somebody could say false breakouts, FBOs, right? False breakouts. But also we could consider the wicks here on the bottom as false breakouts as well, right? Because at least on the M5 they would have been false breakouts. So basically, that was the strange thing, because basically, if you look at this from this point of view, and you look at my trades again, then again even the second, so both the first short and the second short would have been profitable at this moment, right? At this moment, or even right now. Well, maybe not considering the spread, but yeah. But that's where the market is heading. It's heading down, not up. So this whole pullback right there was something. This is something that very often happens. I mean, I really often think about it, because this is not like the first situation. I've seen this situation for many years. That the market suggests going down, right? For example, like today. I mean, there was a strong suggestion on my first short that the market would be going down. I mean, the price action suggested that. Also, price action suggested that the market would be going down on this one, on this third trade right there. That was also short, right? And then all of a sudden the market turns around and goes up like 100 or 200 pips or 300 pips sometimes. After which it actually does go in that initial direction, and it even makes a profit. And that's what really often happens, and that really makes me wonder. I mean, people have been talking about it. I don't really believe them, but okay, maybe that's some kind of manipulation, or maybe it's not manipulation, but it's simply the way price reacts, and we simply have to learn that the action, I mean, is very difficult for some people. Also for a person like me, who, I mean, we always make decisions on what we see, right? So if somebody knows about this fact, they can actually manipulate us, right? Or manipulate the mob in such a way, right? So we have to be smarter than that, right? We have to be smarter than that and not let them manipulate us. And that's pretty difficult, because those are like natural reactions, right? They are very natural. These types of reactions are very natural. Okay, anyways, tomorrow is a new day, and we'll see what happens tomorrow. So thanks a lot for today. This is the daily recap for today, I hope you are keeping well, and yeah, like as usual, like, subscribe. You know, I have I've been doing this channel for many years right now, and I've got I don't even have 200 subscribers. I don't know why. I mean, people have thousands and hundreds of thousands, millions of subscribers. I can't even reach 1,000 subscribers. I don't know. So, so just please help me reach that 1,000 subscribers, or a little bit more. I mean, what's wrong with that? I don't know. Okay. Anyways, all the links you have all the links below in the descriptions. So the invitation to my Discord channel, and the invitation to my Patreon channel, where you can become a patron at any amount. The minimum amount is $1, but but $17 per month gives you the special benefits and special bonuses, like especially the VIP role on my Dada's trading room on the Discord server. And then there are the benefits, the basic benefits. Okay, anyway, thanks for today. Please keep safe, please sanitize, and keep healthy, and see you tomorrow. Bye.